I am going to attempt to provide you today, over the next 90 minutes or so, every single thing, every single component that's necessary to trade the markets professionally. The goal will be to try to put each and every one of the things that I share with you, and I'm going to share with you 6 things. The goal will be to try to put all of these 6 things together every single trade that you make. Very important. I don't want you to miss that. So make sure you like this video. Make sure you subscribe to the channel. And make sure you turn all notifications on so that you don't miss a single thing. So I want you to understand that it's necessary to get all of these 6 things right every single trade. If you focus on making sure that the 6 things that I'm going to share with you are incorporated inside of every single trade, you should actually make a checklist. You should make sure that no trade is done without you ensuring that these 6 things are in place. If you do that, I promise you with every ounce of energy in my body, I promise you, you will not have tremendous trouble in your trading life. You will grow. You will progress. You will have a much higher chance at achieving that ultimate goal of trading mastery. We're judging whether or not something is truly an elephant bar by the last 5 same color bars to the left of it. Now, even if this bar is the first bar of your day, you're still looking at the last 5 bars of the same color the previous day. So this could be the first bar of the day that you're identifying, but you're judging the last 5 bars of the same color from the previous day. Or this could be in the middle of the day or later in the day, and you're judging the last 5. So it doesn't matter when you're identifying an elephant bar, you're always going to look at the last 5 bars of the same color before the elephant bar to determine whether or not it's sizable enough to rank or rate as an elephant bar. Okay, that's item number 1. That represents 60 to 65% of all of your trades. Item number 2, tail bars. Now, there are really kind of 6 type of tail bars. I have 4 here, but they all fall into 2 different categories. There's what we call bottoming tail bars, where the tail of the bar is at the bottom and the little body is at the top. Now, this is a very important concept here about tail bars. What makes a tail bar truly a tail bar is that the majority of the bar's range from high to low is tail. So the majority of the bar's range is tail, and the body at the top of the bar is small. If you have a body that is not small, but also part of a tail, that's not a pure tail. A pure tail bar is the majority of the bar's range is tail. So it's almost like a snowman. All right? Almost like a snowman, where your tail represents the vast majority of the bar's range. The head or the body, whether it's green at the top or red at the top, represents the smallest part of the body. Then you have your topping tail bars, right? This is where the tail is at the top of the bar. And so it's an upside down snowman, where the tail represents the vast majority of the bar's range, but the body being at the bottom, whether it's green or red, represents the smallest part of the bar's range. Now, tail bars can be viewed more as torpedoes, if you will. So this looks somewhat like a torpedo. And since the torpedo portion of it is at the bottom, you're looking for upside after bottoming tail bars, and you're looking for downside after topping tail bars. So think of these bars more as torpedoes. Now, notice that there's a green top and a red top for each version. Bottoming tail bars can have a green top, bottoming tail bars can have a red top, and vice versa. Topping tail bars can have a green and red bottom. Now, the different colors don't make a great degree of difference. It's literally the tail that possesses the vast majority of this bar's power. So as long as you have a decent tail, the top really doesn't matter that much. The odds of follow through are very, very strong. Now, remember I told you that the elephant bar that'll represent 60 to 65% of your trades, right? 60 to 65% of your trades. The tail bar will represent about 15% of your trades. So with elephant bars, let's say you're around 60%, and tail bars, you're around 15%. So just with elephants and tails, you have the vast majority of whatever the market throws out to you in the terms of trading opportunities. These two represent the vast majority of the market's opportunities. Elephant bars have a follow-through rate of 70+%. That's right, 70+%. Meaning that 7 times out of every 10, when you spot a green elephant bar, there is more green to come. 70% of the time when you spot a red elephant bar, 7 times out of every 10, there is more red to come. That's what I call a follow-through rate. Write that down, guys. Elephant bars have a 70% follow-through rate. The tail bar has about the same. So the tail bar has about a 70% follow-through rate. Same thing. Both are similar in terms of their follow-through rate. So your bottoming tail bar will have more upside seven times out of every 10. Your topping tail bars will have downside flow or downside movement or downside follow-through 7 times out of every 10. But I'm going to share something very special with you. Get this. Oh, yes. Sometimes you'll get dual bottoming tail bars and dual back-to-back topping tail bars. These, when you have a stock that has produced 2 bottoming tail bars in a row, 90% follow through. Guys, this is one of the most reliable things in the world out there. Dual, and don't even let me start talking about triple tail bars. But dual and beyond, dual, triple, these things have 90% follow through rate, which basically means if you are in somewhere close to the end of the formation of that tail bar, you have a 90% chance of going home with money, 90% chance of follow through, 90% chance of more upside to come, which basically means, don't forget, 90% of the time, 9 times out of every 10, you get follow through to the upside, and 9 times out of every 10 tries, you get more downside if you have dual back-to-back tail bars. That's how reliable they are. And so because of this higher reliability, my traders are taught to play these more aggressively, to play these with more size, to put more money at risk on the dual and triple bottoming and topping tail bars because the reliability is so high. Now, don't forget your numbers. The elephant bars will have, you're going to do that about 60% of the time, and that has a 70% follow-through rate. All right? Tail bars, you're going to do these 15% of the time, and they have a 70% follow-through rate. I know it's hard for me to draw very well with this, but you get the point. But dual tail bars, they're going to happen, not even. They don't happen very often, something like 2%. But when they do, OMG, 90% follow-through rate. So we've got 3 things so far, right? I've shared with you Three things that are going to make up the crux of your trading approach. These are where the most reliable activity is, the most reliable opportunity is. There's opportunity all over the place, but a lot of it's not reliable. We only want to carve out the most reliable opportunities out there. So you've got three things so far: elephants, tails, and dual tails. Okay? Now, the last event, this is the last one. We have elephants, tails, dual tails, and 180s. I call these 180s. I call these 180s to represent the fact that this is almost like a 180-degree turn in your stock. So first, the bull 180 is first experiences a bear elephant bar, which suggests downside movement. Remember, elephant bars have a 70% follow through. Bear elephant bars have a 70% follow through to the downside. But in this scenario, there is no follow through, and there's an immediate wiping out of the red bar by an even more powerful green elephant bar. So the green elephant bar overshadows the red elephant bar. It dwarfs it. It absorbs all of its power into itself. It annihilates it. It erases it. The red elephant bar has no more significance now because the green elephant bar has totally dwarfed it in power and significance. And so now everything goes to the bull green elephant bar. All the benefit of the doubt goes to the green now. And this is what's called a bull 180, a 180-degree turn created by the bulls. Boom! Now, check this out. This has an 80% follow through rate. Boom! 80% of the time, you're going to see higher prices after this event. 80% of the time, you're going to see lower prices after this event. Write that down. 80% follow through rate. Very, very reliable. Extraordinarily reliable. And I want you to make a note of this as well. This, out of all the things I've explained to you, this is your most powerful. By a little bit, not by a lot, but it's your most powerful, which means that statistically, the 180 plays produce the biggest, longest runs in your stock. All right? So the 180 edges out the others in terms of maybe the 180, when you identify it, has more money in that play than the others because it statistically produces longer runs in the stock. Okay, step 2. All right, let's go, guys. How do you enter these 4 events properly? This is very important. Your entry is important, guys. If you know how to identify the event, but you enter the event too late, you've dramatically affected the odds and the consistency of the play. If you enter too early, you're going to increase your stop outs. If you enter too late, you're going to cut down on you're going to do 2 things. If you enter too late, you're going to cut down on the potential profitability, and you're going to increase your losses by from the 30% that don't work. Remember, most of these things have 70, 80% follow through rate. That doesn't mean that you're not going to lose on them. That just means that you're going to lose less on them, but we don't want to exasperate the losses by entering too late. Okay? So knowing when and where to enter each one of these things is important. This is step number 2. Now, there are 2 ways to enter each one of these plays. There's the anticipation entry. And this is, by the way, the anticipation entry is the safer entry. Most people don't realize that, but it's the safer entry. The anticipation entry on an elephant bar is when you buy into the elephant bar before the elephant bar is finished forming. So we're going to assume that we're using a 2-minute chart. All right. So this is a 2-minute bar. All right. Now, an anticipation elephant bar means that you're going to buy into this bar before the full 2 minutes is over. So look at what look at what I have here. It's 1/2 to 2/3 of the bar we need. We need 1/2 to 2/3 of the bar of this 2-minute bar finished. So 1/2 is the 1-minute mark. All right. So 1 minute into the bar to something like 1 minute, I'd say, and 40 seconds. Anywhere between 1 minute, that's a little on the early side, to 1 minute and a half, 1 minute and 40 seconds or so, you're entering before the 2-minute bar is over. You're inside of that elephant bar with your money. You have put your risk, you have put yourself inside of the bar. You're not waiting for the bar to finish. Now, if you do this too early, you run the risk of the elephant bar disappearing on you. Elephant bars that form in the first few seconds of the bar, they're not real yet. You need time to prove that the elephant bar is going to remain an elephant bar all the way through the 2-minute bar. So I would say the closer you enter toward the 1 minute 40 seconds is better. So 1 minute is okay, but there's still 1 minute to change the elephant into something different. But if you enter at 1 minute 30 seconds, 1 minute 40 seconds, there's not enough time left in the bar's duration to change the nature of your elephant. So you can be sure you are buying a true, real, substantial elephant that's not going to change to a little mouse on you. We don't want the elephant changing to a mouse on us. So don't get in too early. Anytime after 1 minute is acceptable. Closer to 1 minute and 30 seconds is better, in my opinion. That's called the anticipation entry. If we're looking to play to the downside, we want to short or go into this elephant bar before the 2-minute period is over. So about 1 to 1 minute. That's a little early, as I told you, but 1 minute to 1 minute and 40 second mark. The closer you are to 1 minute 40 seconds, I think is a little bit better. All right, 1 minute 30 seconds, 1 minute 25 seconds. Really close to the 1 minute mark. Again, you have too much time still, in a way, for this red elephant to shoot back up on you. All right, so don't jump the gun too fast. You're going to increase the odds of your bad plays. You're going to increase the odds of your stop outs if you act too quickly. 1 minute, 30 seconds is the gold standard. You can do it after 1 minute, but 1 minute, 30 seconds more or less is the gold standard. All right. That's how we jump inside of elephant bars using the anticipation entry. Now, sometimes you're just not going to be able to get into the elephant bar. Sometimes you're going to miss it. Sometimes you're not going to see it in time enough. And sometimes you'll just want to say, you know what? Let me wait a little bit longer. I'm going to let the elephant bar finish, and I'm going to get in on the very next bar that clears the elephant bar's high or low. So boom, this is the very next bar that clears the high of the elephant bar that I liked. All right, that's called the confirmation entry. Now, when you're using the confirmation entry, you do not wait for this bar to be more than a minute or so. No, this one doesn't have a time requirement. You can get into that second bar in the first few seconds. You can get into it at any time it crosses the high. Same thing here. You can get into the confirmation entry bar at any moment it clears the low of the elephant bar, the bear elephant bar that you liked. So you are piling into bar number 2 here. All right? The one that starts following through on the elephant. So there are 2 ways to enter, right? 2 ways to enter. Anticipation. This is your safest one. It's your safest entry because your protection is closer to you, which we'll get to. The confirmation, your protection is a little further. So Some people automatically assume confirmation is safer. No, anticipation is safer. Confirmation is acceptable, but anticipation is safer as an entry method. And there will be times you're going to use both of them. You might decide that confirmation is better this time, or you can't be, let's just put it this way, you can't be wrong with any one. You can be better, but you can't be wrong, right? I want you to understand that. You can be better. Sometimes anticipation is better than confirmation, but you can't be wrong doing confirmation. Sometimes confirmation is better than anticipation, but you can't be wrong doing anticipation. All right? You can just be better. You can't be wrong. These are the two ways we enter elephants. The two ways we enter tail bars are we have an anticipation entry on the tail bar. Now, this is important to understand. If your tail bar stays normal, you're going to use, I should do this first. If your tail bar stays normal like this, what's normal? The body is little. The tail is sizable, but the body's little. That's a normal tail. If your tail bar stays normal, you should be using confirmation, not anticipation. You should be buying as soon as the next bar clears the high. As soon as the next bar clears the high. Boom! So normal tail bars get confirmation entry. Same thing. As soon as the next bar clears the low of your topping tail bar, as soon as the next bar clears the low of your topping tail bar, that's called confirmation entry. Anytime you are not buying or entering the event itself and you are entering after the event has completed, you are using confirmation. Anytime you enter the event itself, you are using anticipation. Now, here's anticipation tail bar. What has happened with the body? Look at what's happened with the body. You have gone from having a normal body, which is little, then all of a sudden the green stops being normal. You're like, wait a minute. Let me make that smaller. You say, wait a minute, this body is no longer little. This now qualifies as a torpedo tail bar. Torpedo tail. Boo! I'm going to buy into that green bar before this bar finishes, as long as I'm past 1 minute to 1 minute 40 seconds, more or less. Remember, the gold standard is about 1 minute 30 seconds. As long as I'm around that 1 minute 30 seconds, boom, I can buy into the bar, even though there's more time left in the bar's formation. I am anticipating that this bar is going to close as a tail bar. I am anticipating, you see, we were normal here and we kept growing the body. Boom! I am anticipating that this bar is going to end like this. I am entering the bar. Remember, 1 minute 30 seconds is that gold standard. Boom. So, once again, anticipation entry on the tail bar, confirmation entries on the tail bar when the body's small. So, body's small, confirmation entry. Body on the tail bar is not so small, get inside the bar. 1 minute, 30 second anticipation. Okay, entries on the 180. All right, this by default is a confirmation entry. All right, you are buying the green bar as soon as it crosses the high of the red bar. Boom. You are shorting the red bar, boom, as soon as it passes the low of the green bar. Remember, In the 180s, what's significant is the fact that you are wiping out the opposite color. You are wiping out. How strong do you have to be to make an elephant disappear? See, this green bar, this elephant made the other red elephant disappear. That's strength. This red elephant made the green elephant disappear. That's sheer power. That's why we want to bet with the sheer power. All right. So as soon as this bar does not have a time restraint. Anytime you are entering above or below something, there's no time. The time is when you're anticipating, but there's no time requirement if you have a high or low reference point. In this case, we're buying the green above the high of the red anytime it happens. And here we're shorting the red anytime it crosses below the green. There is no time restraint or time requirement for this. Step 3, know how to protect yourself. Guys, I didn't say that these things were 100%. Because if they were 100, if they had 100% follow through rate, we would not need protection. We would not need an insurance policy. We would not need protective stops. This is not the real world. This is real trading. It's not Disneyland. It's not your dreams. All right. When you stop watching Disney movies and you freaking wake up, you realize that I am always going to have to deal with loss. Loss is a permanent part of this game, but I need to know how to manage my losses professionally. I need to know how to control my losses professionally. I need to know how to deal with them professionally so that the losses don't take me out, so that the losses don't take away my 70% wins. So 20 to 30% of the time I'm going to lose, which means that 2 to 3 times out of 10 times, I might have to deal with a loss. But as long as I deal with that loss appropriately, I'm going to be fine. 7 wins, 3 losses, fine. 8 wins, 2 losses, fine. Sometimes 9 wins, 1 loss, fine. That's the world I want you living in. Now, the main protection is what I call the 1 bar stop. If you enter an elephant bar, your stop is going to be 1 bar, the bar that you jumped into, the bar that you identified. You identified an elephant bar, that's going to reference your stop. You don't want to lose your event. This is your event. You have dived into the bar with your capital. Now, protect yourself 1 penny, not 2 pennies, not 5 pennies. Oh, well, I get some traders that some traders that say, Oliver, how far below the elephant bar should I put my stop? What do you mean? Right there, 1 penny. If you could split the penny, I would say half a penny. If you could split the half, I would say 1/8 of a penny, 1/10 of a penny, 1/8 of a. Do you understand? Don't give this any extra room. Don't increase your loss potential. You want that as tightly snugged up there under that elephant bar right there. All right. No filtering, no giving it extra room. But I want to give it extra room. No extra losses. 1 penny under that bar. Okay. So 1 penny under the bar. If you are shorting an elephant bar, boom, you're in the bar. Your next step is to place your stop 1 penny above the high. No exceptions. If the market removes the very bar that you identified as the opportunity, if the market removes your opportunity, why do you still want it? Why do you still want it? You should not want. This is what got you into the play. Now the market removes it like this. All right. So I don't want you losing more than 1 bar. Guys, let me just tell you this. You've heard me say this before. You've heard me say this over and over and over again. If you limit your losses to 1 bar, you're going to be in this business forever, for a long time. The market will never remove you if you limit your losses to 1 bar. You see, the problem that most people have is that they allow the market to take them out. The market wants to take you out in the beginning, right? The market wants to issue you. All right, the market wants to keep a very tight number of successful traders that pull money out of it. It protects that group. It doesn't like new members, so it tries to take you out in the beginning. But you're going to be guaranteed that the market will never be able to take you out if every single loss is 1 bar, 1 bar, 1 bar, 1 bar. Okay? Or the majority of losses are 1 bar. So if you get 1 bar loss, your wins are going to take care of that. You're going to have 40 bar wins, 20 bar wins, 15 bar wins, 8 bar wins, 4 bar wins, 3 bar wins, 7 bar wins, 14 bar wins, 12 bar wins, but every single loss is 1 bar. And so when you put all of your trades together, let's say you put 20 trades together, you might experience 4 losing trades, 16 winning trades, 4 losing trades, but every 4 losing trades is limited to 1 bar. And the others have been allowed to run. Maybe out of that 16, you get a 10 bar run, a 4 bar run here, a 30 bar run there, a 6 bar run here. But every single loss, 1 bar, and you're in this game forever. If there's one thing that you should maintain for the rest of your life, is this general 1 bar loss rule. Okay, let's go. Okay. So 1 bar loss, enter 1 bar stop. Enter 1 bar stop. Okay. Now, enter confirmation, 1 bar stop. Enter confirmation, 1 bar stop. Boom. All right. That's easy. 1 bar stop. Enter anticipation on a torpedo bar. Boom. 1 bar stop. Enter on an anticipation entry with a torpedo bear bar, boom, 1 bar stop. Don't lose more than 1 bar. This is your bar. Out. This is your bar. Out. Your wins will take care of this. Don't worry about losing 1 bar. Your wins are going to take care of 1 bar losses. All right? Same thing here. Enter, boom, 1 bar loss, 1 penny. Enter 1 bar loss. Boom. Enter 1 bar stop. Boom. Enter 1 bar stop. Boom. Don't play around. Out. Move on. No big deal. Your wins are going to take care of your losses. Your 1 bar losses. Okay? Same thing with the bear 180. Your enter 1 bar loss. Boom. Enter. Boom. Where's that red bar? 1 bar loss. Don't worry about losing this. The wins take care of 1 bar losses. The wins do not take care of more than 1 bar losses. They take care of 1 bar losses. All right? Now, there are exceptions. I will cover that. We're going to get to that, but this is what you're going to do 90% of the time. All right. Step 4. So we're already at step 4. I want every single step on a piece of paper while you're trading. And you're going to make sure, am I playing an elephant? Step 1, am I playing an elephant tail, dual tail, or 180? Step 2, am I entering anticipation or confirmation? Boom. Step 3, am I losing just 1 bar if this doesn't work? Boom. Step 4, know what locations to play. Now that we know what to play, now that we know, guys, look. So now that we know what to play, now that we know how to enter that, now that we know how to protect ourselves for the small percentage of time that it's not going to work, nothing's 100%. Now that we know that, now I want you to know where these things have the best odds of winning. All by themselves, they have a 70, 80, or 90% follow-through rate. So listen to me carefully. Your elephant bar has a 70% follow-through rate. That is no matter where it is. But if we make sure that we play the elephant bar in the right neighborhood, now we're going to jump that 70% into the 80 percentile. So just like in the real estate market, I know how to build a house, a beautiful house. So I know I'm going to be able to I'm a house builder. I know how to build beautiful homes. I know I can get money for my beautiful homes, but if I pick the right neighborhood, if I pick the right neighborhood to build the house in, the value of the house goes higher, right? So this is how we're going to approach these things. Elephant bars in the right neighborhood have more value. Tail bars in the right location, neighborhood, have more value. So let's cover the right neighborhoods, the right locations. It's location, location, location. All right, let's go. Boom. All right. Step 4, know what locations to play these things in that I've taught you. Okay? Now, in order to know locations, we need 2 moving averages. All right, these 2 moving averages will be forever on every single chart, every single time frame you ever look at. It's the 20-period simple moving average and the 200-period moving average. If you followed my work for any amount of time, you know these are the granddaddy of all moving averages. The 20 and the 200, we use them as a buddy system. They're both, notice how the 20 and the 200 are relatively flat and close together. That's important. So they're relatively flat and close together. They're laying on their backs, if you will. They're close together. They're sunbathing, however you want to look at it, right? They're not standing up. They're not running to the upside. They're not running to the downside. They're relatively flat and they're relatively close together. When you have these 2 moving averages relatively close together, the location right above them, OMG. Let's just put it OMG. This. You build your house there and you can name your price. Do you understand this? The location that will give your events the highest value, that will give your house the highest value, that will give your elephant bar the highest value, that will give your bottoming tail bar the highest value, that will give your bull 180 the highest value, is that location right there. All right? So if you get an elephant bar here, it's not 70% follow through. It's now in the 80% follow through. If you put a bottoming tail bar there, it's not 70%, it's 80% now. If you put dual bottoming tail bars there, it's practically 100% guaranteed. That's very dangerous to say, but practically, almost. Because dual tail bars already have 90%. You put the dual tail bar right there, and you can basically just name your price. There is no location better than number 1 here, right above your 2 main moving averages, the 20 and the 200, when they're flat. Okay? Best location. Second best location on the downside is right below the 2 moving averages. So we want bull events here, right? We want bull events here, and we want bear events there. So I want bear elephant bars here, and I want bull elephant bars there. Okay? So above the moving averages, we want to go long. So we want long or bull events. Under the moving averages, right under, we want bear bars so that we can play short. Now, if we get the opposite bars there, we do nothing. So if I get this bar here, like this, I do nothing here because I don't have a match. This is my bull territory, and this is my bear negative territory. I want red and bearish there, and I want bull, green, and bullish there. If I get a mismatch, I'm sipping coffee. All right? Please understand that. Write that down. No mismatching. No mismatching. Green, powerful events right above, go long. Red, powerful events right below, go short. Write that down. Don't mismatch. All right? Okay, this is what I'm saying. If we're right above the moving averages, we're going long. If we're right below the moving averages, we're going short. Okay? This is your best location. All right. The order of the moving averages don't matter. So notice how in this scenario, the 200 is above the 20. All right. Here's the 200. It's above the 20. Doesn't matter. In this image, I have the 20 above the 200. It doesn't matter. It's not whether one is on top of the other or not. That doesn't matter very much. What matters more is are they both relatively flat and are they both relatively close together? That matters more, not the order, not who's on top, who's on bottom. All right? That doesn't matter. It's are they relatively flat and are they close together? All right? So the order doesn't matter. All right, good. Now, what's location or neighborhood number 2? If you can't get, sometimes the market's not going to give you neighborhood number 1. You're going to have to look at maybe neighborhood number 2. Now, this neighborhood number 2 is in the wide state. So remember, the other neighborhood or location was in the narrow state when they're both together. Well, what about when the 20 and the 200 are wide apart? There's a neighborhood up there too. This is neighborhood number 2. This is location number 2. Now, in the wide location, this is where your 20 is wide apart from your 200, and the stock is above both of them. All right? So remember that. 20 is wide from your 200, and the stock is above both of those wide apart moving averages. That's the second best location. Okay? Now, from this location, you want to play down most of the time. All right? The reason you want to do this is because markets vacillate between narrow, see here, narrow, wide, and then back to narrow. Narrow, wide, and then back to narrow. So if you're up here, what's next? Back to narrow. If you're down here, what's next? Back to wide. Now you can also go from narrow to wide this way. Boom. See? And so check this out, guys. We want green here or red there, right? Red there, right? Red there. Or we want green here or green there. So we don't have to know which direction the market's going to go. We need to know what does it give me an event here? I'm buying. Does it give me an event here? I'm buying. Does it give me an elephant or dual tails or bull 180 there? I'm buying. Does it give me a red elephant here? I'm shorting. Does it give me a bear 180 here? I'm shorting. Does it give me dual topping tail bars here? I'm shorting. You don't have to read the future. You have to wait for the now in the right location. And if I'm going to go down from here, does the market give me right here, does it give me a bear elephant bar? Then I'm going shorting. Does it give me a bear 180? Boom. Does it give me dual topping tail bars? Boom. So neighborhood 1, neighborhood 2. Okay? Neighborhood 2. We're looking to bet down to bring us back to a narrow state. Okay. And there's this the wide state location at the bottom where your 20 is wide apart from your 200. Your 20 is wide apart from the 200. And you're looking to play up, back up. Why? Because markets vacillate between narrow, wide, back to narrow again. So if you're already wide, the odds are better up. Okay? So I want bull elephant bar down there, bull 180, bottoming tail bar, dual bottoming tail bars. right? Know what locations to play your plays in. So this is the summary of the locations, guys. We've gone, if you're narrow, you're playing these locations. If you're wide, you're playing the opposite locations. You're playing wide back to narrow or narrow back to wide. Ones are narrow back to wide. Twos are wide back to narrow. Boom. You want your houses are your events. You want your houses to form in locations the ones or the twos. These are your two major neighborhoods. We know the locations, we know the two neighborhoods to play the events in. We know how to enter the events, we know how to protect ourselves. All right, we're building something very powerful. Now, we will get to charts and examples in just a bit here. In just a bit. What I want to do, though, is I want to charge this battery up a little bit. All right, so we've got, this is putting it all together. So in location 1, if I get a bull elephant bar right above this narrow state, or a bear elephant bar right below, I know that this is extraordinarily high. Now remember, if I got the right location, I'm 80%. I'm going to have wins of 8 times out of every 10 from this location. I'm going to have wins statistically 8 times out of every 10 from that location down. If I play here in location 1, any tail bar combination, I'm extraordinarily high success rate. Topping tail bars from that location, high success rate. Bull 180 from that location, really high success rate and very powerful. Bear elephant bar from that location, powerful. All right. Remember, flat moving averages. If my moving averages aren't flat and they're really wide apart, I am looking to go the other way, back to narrow. But I need a bullish event down here. I need one of my bullish events. Remember, you're never playing anything that's not an elephant, a tail, a 180. There's nothing else to play. All right? There's no playing, I think it's going to go up. That's not a play. I think is not a play. I think it's going to go up. Here is the opposite. We're not narrow anymore. We've gone way wide, and I get a bear event wide apart here. Boom, I'm betting down. Boom, I'm betting down. Boom, I'm betting down. I don't just bet down. Guys, don't fall for just playing the location. You need the event in the location. Don't just play the empty lot. The location is the lot. You need the house on the lot. You need the bear elephant bar at the location. Boom. You need the bear 180 at the location. Don't just say, I get this all the time with traders. I say, why did you short there? Why did you bet down here? And they said, but it was wide moving averages. I'm like, but where is your freaking event? Where is your event, sir? Don't play the location. It's the combination of the event in the location. You need the house on the lot, not just the lot itself, not just the house itself. You need them both together. Step 5. All right, we're almost done here. I love it. Step 5, know when to double down. Know when to add more money to your play. Know when to double up on it. There is no successful trader that does not add to plays. Professionals add to winning plays most of the time. They don't play the kindergarten approach, which is, okay, one play in and I'm waiting to come out. No, it's usually one in first. If the stock starts proving itself, boom, we double up on this thing. We double down. You got to know when to double down to be a pro, okay? And you have to know when to take profit. So steps 5 and 6 are know when to double down and know how to take profits. All right, you gotta know how to take profits. In fact, let me just say this: the profit taking part of the equation, traders, is the art part of the game. Everything else is scientific. The identifying the right play is scientific. Entering specifically is scientific. Placing your stop 1 penny above or below the low, that's scientific. Identifying your locations are scientific. Your profit taking is the only thing that's not scientific. It's the artistic part of our activity called trading. And I'll explain to you why it's the artistic part. But let's now start going to examples here. All right, I love this. Let's do it. Okay, love this. You're looking at 2-minute chart of Starbucks, guys. A 2-minute chart of Starbucks. Here, okay? Everybody knows Starbucks. I want you to look at the left-hand side of the chart, sir, ma'am, trader, watcher, observer. Look at the left-hand side of the chart. Notice that this is your 20-period moving average, and this is your 200. Now look at the left here. Look at how close they are together. Look at how they are sleeping or lying on their backs. Doesn't matter which one's above or below. That doesn't matter. It's more the flatness and the closeness, the narrow state that they find themselves in. Now, this is the first bar of July 6th. That's the first bar of the market's open. Now, most of you should know that I'm an expert at trading the open. This is what made me somewhat famous on Wall Street, because no one traded the open like I did on Wall Street. I created sort of like a new mode of operating. That's why so many firms wanted to learn from me, my style, because in the first 20 minutes, I would have more money. First 20 minutes to 1 hour, I would have more money than the vast majority of all traders on the street. This is crazy. But I became that 20 to 30-minute trading master, and most traders would start 30 minutes later because they felt they needed to see what the market's flow, what the market's path of least resistance was. So they gave themselves 15 to 30 minutes to watch. Meanwhile, I'm finished. This is what made me unique all the way back into the mid to late 1980s. That's how early this was, guys. So here's the first bar of the morning. Now, what if the first bar was up here? Then you would be playing long. But we don't have to know which side. We just have to wait for the market to tell us. Well, the market is giving us the first bar, and it's giving us the first bar, and we know what that first bar is. It's a topping tail bar. And you should know whether it's anticipation or confirmation entry. Now, confirmation entry is 1 penny under the low, and anticipation, that's confirmation. This is anticipation. Right? Anticipation. And I say it's anticipation. Why? The body is not little. The body is not little like this. That's what a real tail bar is. If that red bar grows more than it stops being a confirmation tail, it starts being a torpedo. So your anticipation in, boom, let's say 2 lots. All right. In the professional world, a single lot is 1,000 shares. All right. A single lot is 1,000 shares. 2 lots is 2,000 shares. Professionals use a lot sizes based on thousands, right? So 2,000 shares, boom, that's 2 lots right there. All right. Let's get this right here. So we're going into 2 lots. What's your stop? Protection. Boom. 1 penny above the high. And the rest is history. Now, let's talk about profit taking. I want you to think of the number 4. Okay? So we are getting into so the elephant has 4 feet. We're getting into the first foot of the elephant right there. Now, additional foots have to be what I call pushes, not bars. A little bar doesn't count. So little bars must be thrown together to get another foot. So this is foot 1. This is foot 2. These two are foot 2. You can always combine 2 little ones to get a foot. So here's foot 3 and here's foot 4. I hope you understand that. Little single bars can't count as a foot. You need 2 little bars to count as a foot, or you need 1 little bar and a regular bar to count as a foot. You got to throw the little one in with the bigger one, but a little one doesn't count. Another way of looking at this is just to remove the little one out of the equation, but I prefer the other approach in your mind, which is to combine them. All right? So in a sense, you have foot 1, you have foot 2, you have foot 3, and you have foot 4. You should be taking profits. You can take profits in foot 3 and 4. So what a lot of traders would do is they would be in, boom, 2, 1, okay? Profit take, boom, done. Okay? This is 2, 4, 6, 8, 10, 12. 12 minutes. 12 minutes and you're freaking done. All right? And this is roughly a 75-cent play. You're talking about 2,000 shares on that. That's pretty big. All right? A little less than $2,000, but still. All right. Now, all right, we will get to adding as well. I just want you to understand these steps again. So, anticipation entry tail bar, it's torpedo bar. That's anticipation, 2 lots anticipation, 1 penny stop above the high. This is foot 1. Here is foot 2. Here's foot 3. And here's foot 4. Boom, boom, profit take. Beautiful. All right, let's go to the next example here. Now, look to the left of your chart. This is Morgan Stanley, a Wall Street bank. I trained a lot of traders in Wall Street and in Morgan Stanley back in the early 1990s. So, Morgan Stanley, look at their stock. Look to the left. Look at your 2 moving averages. Always determine what the state of the moving averages are first. Look at how close they are. Look at how they're on their backs. They're sideways. They're flat and close together. Now, here is the first bar. If I'm not mistaken here. Maybe it's the second bar. But here is your elephant-like bar, or one way to look at this is that it's a tail bar. It's an anticipation tail bar, right? Because take a look at this. Wasn't this green small at one point? And look at that tail. Now, some of you say, well, Oliver, wasn't this a red bar first? It was. And wasn't that in the perfect location to go short? It's in the perfect location to go short. And this is why, traders, that you cannot anticipate too early. This is in the first few seconds of the bar. Do you understand? This is the first few seconds. If you get in too early, look at what happens. Boom, boom. That's why that 1 minute, 30-second golden rule is there. to not get tricked like this so often. Okay? So if you get this thing 1 minute, 30 seconds, it's clear that this is the buy. This is my anticipation buy. 1 minute, 30 seconds, 1 minute, 40 seconds into the bar. Boom! 2, stop 1 penny below the low. And now you're in. Now, you know that 3, 4 feet later, we have the right to take profits. But I also want you to try to double down on your plays, to add to your plays. Okay? So most of my traders, they have 5 lots to play with. Okay? So we're already in 2. We're going to put another 1 or 2 into the play on what? The next color change. I'm going to do that. Color change. CC. Color change. What is a color change? When a green bar takes out a red bar, I want you to buy the green bar, add the green bar, the first one after. So you're in the original event. The first time green eliminates a red bar, I want you in that green bar. I want you inside of the green bar that eliminates a red bar. And I want you to do it pretty quickly. So see how this is red? When does it eliminate it? Right there. Boom! You're not waiting for a minute in this case. Remember, when you're buying above something, there's no waiting. So you get right into this green bar as soon as it clears the high of a red bar. Okay? Your entry is right there. Boom! So here's how this trade goes. Enter. Boom! Protection. Add. Boom! The rest is history. Now, let's count the feet, right? Let's count the feet. Okay? This add counts as a foot after this one. So you've got this is foot 1. You've added on foot 2. Elephant has 3. Here's foot 3. And remember, these little bars don't count. Here, I would add these 2 green together. Here's foot 4. And yes, sometimes you can get a foot 5. 5 is not a foot. It's more like the elephant sits down in the tub. So the elephant sometimes gets his first foot in the tub, puts his second foot in the tub, his third foot in the tub. Now he's got all feet in the tub. And sometimes he just says, I'm just going to take a bath. And he sits down in the tub. Now, once he sits down in the tub, the only next action is to get up. Once the elephant gets up, boom! Then he steps 1 foot out of the tub, boom! Then another foot, boom! And then another foot, boom! Now he's back outside of the tub. And the story repeats. Elephant in the tub, 1, 2, 3, 4, sit down. Elephant stands up, out, stands up, 1, 2, 3, 4, out, and repeat, repeat, repeat. Elephant in, 1, 2, 3, 4, sits down, boom. Elephant stands up, boom. Gets out, 1, 2, 3, 4, out, repeat, repeat, repeat. All this game is, guys, is elephants getting in the tub, institutions getting in a stock, institutions coming out of a stock. Elephants getting in the tub, elephants coming out of the tub. And it's based on this 4-5 step process. You see it here. I'm not even cherry picking this, guys. So let's go over the play again. Boom. 2. Stop. Boom. 2. All right. Now we've got foot 1, foot 2, foot 3, foot 4, foot 5. You should be out. This is your first play. And look at when you're finished for the day. Really, boom. That's enough to make a living right there. 30 minutes, 20 minutes, 25 minutes, out, done. Go to the beach, la playa. Love it. You don't have to sit down at a freaking computer screen and get and develop blurry eyes and a bad bladder because you're so scared of leaving a play you don't even want to go to the bathroom. You don't have to play like that. That's a novice game. Pros can pick their time to milk the market for the highest probability plays and be out. Doesn't mean that you can't play longer if you want and take plays like, all right, I'm going to take the next color change. I'm going to take the next color change and make more. You can do overtime if you want. I just don't want you to have to do overtime. I don't want you to have to stare at a computer screen all day. All right, guys, look to the left. Here's eBay. Look at your moving averages. Relatively close. Here they're relatively far away. Right? They don't have to be super, super close either, guys. So this is relatively close. And this is far. Okay? So in comparison, this is narrow. That's fine. Anyway, your stock, the first bar of the morning, boom! Elephant bar. 2 bars in, two lots in. Protect yourself. First, now you're waiting. You're saying, Oliver always told me that in order to be a big trader, I've got to double up. I've got to double down. When is the first color change going to happen? First, you get a red bar. Now, remember, guys, after that red bar, you don't know what's next, right? You don't know what's next. You're in. Here's your stop. Let's erase this. You don't see this yet. Oh, shoot, wrong color. You don't see this yet. This is not there yet. You get this red bar. And you don't know if that red bar is going to stop you out. I get this right. I'll get this right. I will get this right, guys. I will get it right. You don't know. But you're salivating. You know why you're salivating? Because you're like, this could be my double down moment. All I need is for that red bar to be taken out. All I need. You see this green bar starts to form here. You're like, uh-oh, let's get ready. You see it. You're watching it. Saliva is dropping down the corners of your mouth. You're not wiping. Your fingers on the keyboard. Boom! You're coming in right there. You're not waiting. There's no time requirement with this because you're buying above something. Boom! You're going in 2 more lots. 1 lot or 2 more lots. All right? We want the double down. We want the double down. Now, remember, you got the elephant's first foot. All right? Here's foot 2. I put these together. Here's foot 3. Boom. Here's foot 4. 1, 2, 3, 4. That's how you professionally profit take. Woo! That is like a freaking Picasso right there. That is a Monet. A Picasso. I love that. The Chinese say, the Chinese always say, guys, that, a picture is worth 1,000 words. That's an age-old Chinese, give me a second here, guys. That's an age-old Chinese saying, right? That, I'm trying to get back to you here. Let me see if I can get back to you here for a second. Give me a second here. Give me a second. I'm still with you. There we go. Let's see. Let's see. All right. There we go. All right. There we go. I'm coming back to you. Because I need to, sometimes it's more effective if I'm. So, look. Chinese always say, the Chinese proverb, ancient proverb that says, a picture is worth 1,000 words. Well, yes, but this is the modern era. See, for us, a picture can be worth thousands of dollars. Do you understand? These are pictures, but they're the pictures of money. They're the pictures of the footprints. They're literally photos of the footprints of elephants. What are elephants? They're institutions. Now, we need to play institutional play. We need to identify when institutions are getting in. We need to identify when they're getting out. These institutions, they wish they could hide their actions from us, but we're too astute for that. We know when they step into the market. Elephant, bottoming tail bar, bull 180. You understand? Dual bottoming tail bar. We know this. These, what I have taught you, are the symbols of institutions getting in. These are the pictures of Sasquatch, the pictures of Bigfoot. These are not your neighbors getting in. This is not your neighbor saying, I'm going to buy a little bit of Apple stock. These are big, giant, institutional, multi-billion-dollar organizations getting in. And we need to jump on their coattails. Do you understand? To make our money. They're going to take us to the promised land, but we've got to catch them early. We can't catch them on their fourth foot in. We got to catch them on the first foot in. And this is what my approach teaches you to do. You're catching the first elephant footprint. They got 3 more feet. They've got 3 more feet that we can ride, right? All right. Unless you get a cripple one. Sometimes we get a cripple elephant. 1 foot elephant hopping up and down, and we get stopped out. Okay. But there's not many 1 foot elephants. You understand what I'm saying? There's not many of those, so we don't have to worry about that. We just stop out of those the proper way, and we move on to 4 other 4 feet elephants. But there are some 1 foot elephants out there. I don't know what happened, but there are. Okay. All right, good. I got a little bit of All right. So let's continue looking here, guys. We've got UAL. All right, UAL, United Airlines. Look to the left. Look at your moving averages, guys. Look at your moving averages. Look at the 20. Look at the 200. Relatively close. All right. If the market opens above, that's fine. We know what to do, but it doesn't. It opens below. Boom! You're going in 2 lots, protective stop, and you're now waiting. You're hunting. You're stalking. That first time red takes out green. Boom. Waiting. Boom! Love that sound. I love that sound. Can you look at this picture? Can you look at this image and hear that sound? Woo-hoo! All right, so we're in this bar, 1 minute, 30 seconds, more or less, like that, right? 2, boom, boom. We're adding no time limit here. And now, some people say, well, Oliver, how do I count this? Okay, here's foot 2. So remember, each foot has to be better than the last one, right? So you can't have a foot inside of this bar. Like, that's not a foot. The feet have to be more, all right? The feet have to be improving on the past foot. So this one, there's 2. So you got 1, 2. These 2 together make 3. These, I would say, make 4. Boom. Now, there's no rule that says you have to get out of everything at 4 feet, because remember, there's a possible sit down, and you can go more. I teach my traders how to milk these additional moves that can happen after 4. But if I can just get you focused here, where your day is over after foot 4 and 5, I can turn all of you into freaking money-making machines. If I can just keep you here, if I can make you focus there, where you're done 20, 30 minutes more or less every single day with your profitability, with your consistency, you're in the top 2% of all market players out there. If you get this right, these 6 steps right, you're in the top 2%. That is extraordinarily rare. Look to the left, guys. Look at your moving averages. Look at your 20. Look at your 200. Look at how tight they are. Look at the first bar. Boom! 2. Stop. Second foot. Third foot. Do it like that. And fourth foot. Is it kind of small? First foot. Second foot. Third foot. Fourth foot. Boom! Look at when you're done for the day. Ha ha! That's powerful. You don't have to stare at a machine all day. In fact, I don't even want you to do that, guys. I don't want you staring at the screen looking for an opportunity I don't want you doing that, because you're taking the most special activity on earth, which is professional trading. If you can get it right, there's no activity better. There's no activity that gives you freedom more than this. There's no activity that gives you total autonomy more than this. There's no other activity that gives you independence more than this. Not even if you're a business owner, you got to be at the business all the time. Not if you're a lawyer, you got to babysit clients. Not if you're a doctor, you got to be called out of the bed at night every other night. No. There is no other activity that is more free, that is more independent, that there's nothing better. But only a small percentage of people make it, because they don't have structure. They don't have a system, a method. They don't know how to protect themselves. They don't know how, out of all the thousands of things that can happen, which are the most reliable 4? I just taught you that today. The most reliable 4 that the market can ever give you. They don't know about location. What makes these 4 things even more powerful? Which locations? They don't know location. They don't know events. They don't know narrow state, wide state. They don't know time of day. Open, 20 minutes later, out. They don't know elephant footsteps. They don't know anything. They're looking at the news and saying, I think this is a buy. I think this should go up. Oh, this can't go up anymore. I'm going to go short. Like, that's not how you make it in this business. We take money from those people. I mean, bless their hearts, bless their souls. Because without them, without the uneducated, without the untrained, without the ego-dominated traders out there that feel like they don't need to be taught anything. I love them because they're the depositors. They guarantee that for as long as I live, I will be able to make money, that no one can take this activity from me. Do you know why? Because there's always an idiot. There's always someone untrained. There's always someone coming to the game that thinks they can do it themselves. And they're coming with their family's money. All right, I'll take it. I'll do it. I'm sorry. I will take it. I just don't want that to be you. I'll do it, though. I'll do it. You want to hand me your family's money like this? Oliver, here. Okay, I'll do it. All right, let's get back. I'll do it. All right. Boom. What's the next one here? We got narrow state. You got, guys, this is even getting boring now. What are we doing here? Boo! 2. Stop. First color change. All right? You know, here, I don't care what you do. Here's another color change. You can do that one too. You can do 2 in a row as long as they're not too far from here. Like, I don't want you doing, this one is a little too far from the moving average, right? I like the ads to be relatively close. It doesn't have to be super, super close. But this one's a little too far away from me. That it worked a little bit. But I like them closer. I don't like them also too far from my original entry. So see, here's my original entry and then my ad. This ad is a bit too far from my original entry. This one is not, and this one's not. So there's no rule that says you have to do just one. You can double up and double up again. All right. And so let's just, as long as it's not too far from your original event. So, boom. This is boring now. I'm getting bored. Boom. Boom. You know the rest, guys. Look at where you finished. Look at the time. 9:55. Done. Finish. Go to the beach. La playa. La playa. You don't have La Playa? You don't have the beach? Okay. El Parque. El Mall. Go to the mall. Go to the park. Go to one of your restaurants. I don't know. Whatever it is you do, just go do. You don't have to sit here all day. You're a better trader if you don't, actually. The traders that, guys, a lot of the traders that stare at the screen all the time, they're staring at the screen and looking all day long. They start imagining things. You ever lie down in bed at night, right? And you just can't go to sleep. It's pitch black dark, and you start seeing things like maybe you threw a sweater across the chair, across the room, right? And you're like, that looks like Chucky with a knife. You look close. You start to imagine things, right? You start to see things, right? That's what traders go through. When they start staring at the screen long enough, they start seeing buy setups and sell setups that really aren't freaking there, right? You don't need to do that. I don't want you to do that. That's more of a novice approach. You pick your times. The best times of the market to trade: first 90 minutes, last 90 minutes. The middle, do lunch or whatever it is you do, because it might not be lunchtime where you are in the world, but the first 90 minutes, second, last 90 minutes, done. Leave that middle alone. That's that black hole that robs a lot of traders from the gains they got before the black hole. All right. So I like that first 90 minutes, that last 90 minutes, and particularly that first 30 minutes. That's my specialty. I'm a 20-minute trading specialist. And I want you to be that specialist as well. All right, guys, let's look at a few more, and then we're freaking done. There's no more to do. There's no more events. You know the steps. You know the locations. Boom! And patient entry 2 lots. Stop. All right. First color change. Boom! And the rest is history. All right, guys, you can do this over and over and over. I'm not sharing something that doesn't happen. This happens every single day of your life. Every single day. Now, look at the time. Now, I'm on New York time here. So the open is at 9:30. So we're more than an hour later. It doesn't mean that you can't find these things later in the day. It's not just the open. So here are your flat moving averages. You're well past the open. And boom! Perfect elephant bar location. 2. Stop. And all right. Look at and some of my traders would do this one. Elephant. Stop. Color change. Boom. All right. This is a little too far, but it worked. Color change. Guys, you know how to do this now. It's just now you need practice over and over and over again. This has to become second nature to you. Now, guys, here's something interesting, because look at your narrow state. Here is your first bar of the morning on May 25th, but it's a red bar. That red bar, if that were down here, you would know what to do, but it's not in the right spot. So we do nothing. We do nothing until we get the right event. What are the buy events? The buy events are elephants, tails, 180s. And do that red one there. Right? And You can get sometimes your dual tails, right? But when do we get either this one, or this one? We get it here. Bottoming tail bar. Boom! 2. I'm sorry, guys. I know some of you have cats, and your cats are probably like jumping to the ceiling. Who is this guy? Enter. Boom! And here's your feet. Look at when you're done on this first leg here. Can you do these additional color changes and stuff? Yes, that's a different thing. I just want to get, if I can just get you this right for now, I can just get you there. My God, you're going to be freaking amazing. Money machine. I think we kind of looked at this before. All right. Narrow state, first bar, boom, anticipation entry, because that's a tail plus or a torpedo tail stop. And guys, the rest is history. This is boring now. I want to see if I can get something that's unique and different. You know this, narrow state, elephant bar, in the perfect location, anticipation entry, stop above the high. You know that. Okay, this is, you know this is the beginning of the day. So this is all yesterday. So here's the first bar, boom, anticipation, stop, first color change, boom, the rest is history. I'm just trying to see if I have something unique here. No, this is not unique. Same thing. Just look at it. You do it now. You do it yourself. Look at the first bar. Look at the location. Enter that bar. Do it in your mind. Enter that bar. Anticipation entry. Stop above the high. Where's the first color change? You got this down pat now. It's just making it muscle memory now. Boom, first color change. You can it's not the tail, it's actually the body. So you don't wait for this to go, you wait for the body of the green to go. All right? So it's important to understand. All right, you can do the second color change if you like, because it's not that far from your original event. And look at how soon you're done with your profitability. Guys, this can be thousands of dollars in 20 minutes, 15 minutes. Hundreds to thousands. This is crazy. All you need is the proper amount of money and this method. Okay? That's it. Same thing, guys. All right, I don't want to bore you to death here. This is the same thing over and over again. Now, I don't want you thinking that this stuff happens rarely and I have just cherry picked here. No, your problem is not going to be finding these things. The problem is that you won't have enough money to play all of the ones that you see. I have not taught you something. Guys, listen to me. I have not taught you something that happens so rarely that you got to sit and twiddle your thumbs for days on end before one pops up. No, you'll have too many. It would not do me any good to teach you something that happens once a week. I need to do something that happens more than you're able to take, so that now you have to choose. You might have 3 opportunities and you can only choose 2, or you can only choose 1. So which one has the best location? Which one has the most beautiful bar? If there are 2 elephants and you can only take 1 in the right location, which is the more perfect one? Which has the smaller risk if I stop out? So you'll have to find ways to determine which one do I take. But don't think that this doesn't happen that frequently. It happens every single day, more than you'll ever be able to take advantage of, okay? All right, guys. All right, here. Let's go back to here. Topping tail bar is your first bar here. See it? All right. Boom. Well, in this case, let's say you did confirmation entry here because the body is little. Boom. 2. Stop. Rest is history. I love it. Over and over again. All right, yeah, this is what I wanted to get to. So remember, we did the narrow states, but what about the wide states? All right. Now, remember, same events. Elephants, we're playing back the other way. Once you're wide, you're playing back the other way, and you're looking for elephant bar. Elephant bar, boom. Okay? Love it. Elephant bar, look, another one. The NASDAQ. Wide. You need elephant, tail. All right, here's a baby tail here. But elephant, this is your main one. Boom! All right, stop. Love it. Same thing here. Wide. Elephant. Boo! Stop. Love it. Uh-oh, wide the other way. So you're wide here. And now you're wide here. So if you look carefully, guys, the first event is really here. Topping tail bar up there. In reality, that's the first one I see. But this bear 180, that OMG. OMG. That's the one. Remember I told you that you see how you get a little gain here from the tail? You get this gain. But look at the one you get from the bear 180. That's the big one. Woo! I love it. All right. I love it. All right. Guys, look, this is freaking boring now. All right, here's your narrow range, elephant bar. Look at your narrow state. All right, first color change, 2. First color change, 2. And then now you're far. And you can play back the other way if you like. Tail bar, boom. It's like freaking magic.